I mean, it's a pretty damning read, but it's actually easier than you think to make these kinds of mistakes. And if we look back at the Starling Bank fine, there are just so many similarities. I mean, with the Starling Bank fine, of course, that was focused more on weaknesses in sanction screening tools and data sets. Ultimately, this one is more focused on the customer due diligence side with the classic 10 Downing Street, for example, and the addresses. But ultimately, if you don't have a holistic control framework that's operating with the right questions being asked, the right tool sets and the right data, collecting and verifying the right piece of information, ultimately you don't know who your customers are. And I think that's one of the key things that came out here is that as part of their growth journey, they really thought that they just had UK resident retail customers doing lovely things on their platform. And that's part of that kind of great fintech story. But ultimately, there were customers on there that were trying to do things that were not quite so nice. And that's where you have, the fraudulent use of addresses, and just not collecting that information at onboarding meant that their ongoing monitoring was also very difficult to implement because they weren't collecting the right information, weren't verifying the right information at the start of the process, and therefore they couldn't monitor effectively.